Hi friends, I'm Rebecca. Welcome to Squintillions. Today I'm talking about 5 dividend ETFs that I invested in recently. This is a follow-up to my previous video titled Using an ETF Screener on TD Ameritrade. In that video, I showed the parameters that I set up on the TD Ameritrade screener to narrow down my ETF choices. When the market dipped down in August, I was able to complete my purchases. What did I end up buying? I'm going to tell you the 5 ETF names really quickly, but first I want to remind you that these are my choices and they are based on my personal financial situation, my risk tolerance, my timeline, and life goals, and they do not constitute financial advice to you. If you think some of these ETFs sound interesting, please do your own research before you invest your money into anything. My goal with this account is to earn dividends from ETFs. Up to half of what I earn from dividends will be used as donations to nonprofit organizations that I care about. I'll talk more about my charitable contribution plans at the beginning of 2020 once I know how much I've earned from the dividends in 2019. I have interests in charities involved in education, the arts, health, the environment, and human rights. Once I tell you these 5 ETF names, I'll be going through details about each of them individually. If you're watching this soon after I posted, some of these ETFs are in the middle of their 52-week price range. So if you're thinking of investing soon, you might want to investigate these choices. And here are the 5 dividend ETFs. I'm going to read them so I don't mess up any of their names. Number 1 is CSB, the Victory Shares U.S. Small Cap High Dividend Volatility Weighted ETF from Victory Capital. Number 2 is ONEY, the Spider Russell 1000 Yield Focus ETF from State Street Global Advisors. And this is a mid-cap ETF. The next 3 are all large-cap ETFs. They are HDV, the iShares Core High Dividend ETF from BlackRock, SCHD, the Schwab US Dividend Equity ETF from Charles Schwab, and SPYD, the Spider Portfolio S&P 500 High Dividend ETF, also from State Street Global Advisors. All 5 of these ETFs have dividend yields over 2.9%. And yes, I know that there are ETFs out there that have dividend yields higher than that, but you have to remember that I've factored risk into my choices. I'll go through the details of each of these now with the help from my computer. Okay, here we are at the Victory Capital website looking at CSB, Victory Shares U.S. Small Cap High Dividend Volatility Weighted ETF details. CSB tracks the NASDAQ Victory U.S. Small Cap High Dividend 100 Volatility Weighted Index. I wanted to have some good diversification among the 3 main market capitalization levels, and I was looking for a small cap ETF to invest in. CSB seemed to be the best one that appeared on the ETF screener. And I also picked it because of its investment in smaller companies that I like, but I don't necessarily want the wider risks involved in owning their individual shares. Let's have a look at their holdings. So the top 10 holdings for CSB are Safety Insurance Group, Four Corners Property Trust, Cohen & Steers, Northwest Bank Shares, Unitil Corporation, James River Group Holdings, MGE Energy, Otter Tail Corporation, Herman Miller, and the Washington Trust Bancorp. Also, I'm going to show you a bit of the sector weightings. And their highest percentage is in the financial sector, which worries me a little bit as I'm concerned about higher volatility negatively affecting the value of the fund if there is a recession in the next year or two, like everyone's talking about. Nevertheless, as I intend on holding this fund, actually plan on holding all of these funds for the long term, I will be okay to ride out broader changes in the value, assuming it maintains paying dividends at least its current level. Another thing that was attractive about this fund was that I felt like I was able to buy it on sale as the purchase price was below what it had been in recent weeks when I bought it. I ended up purchasing shares in 2 lots. Half was at the end of May when the market dipped down, and the other half was in August. So I have a total of 100 CSB shares. The dividend yield is at 3.1%, though it says here 3.53%. That was at the end of July. I think it's changed a little bit since then. The annual payout is $1.32 per share. But this fund pays its dividends monthly, which is nice. Because even if you're only getting around 10 cents per share each time, there's this positive psychological factor to having that money hit the account each month. And then we just have a quick look on the performance. You see that the market return since inception is at 9.5%. One of the other drawbacks for me on this fund is that it has the highest expense ratio of all the funds I chose at 0.35%. Okay, moving on to Biter Russell 1000 Yield Focus ETF. Okay, we're on the State Street Global Advisors website now, and we're looking at ONEY or ONEY or ONEY. However you want to pronounce this ticker, ONEY, it tracks the total return performance of the Russell 1000 Yield Focused Factor Index. Almost immediately after deciding that I would buy this fund a few months ago, and before I placed my order, the price jumped up $3 per share at the beginning of June. And I didn't want to pay those additional few dollars per share, so I waited on it until August. I ended up placing 2 orders, 1 lot of 100 as the price started to drop down on August 5th. I was only going to buy 100, but then the price kept dropping down. So I picked up another 50 shares as the price reached down below $65. This fund pays an attractive annual dividend payout of $2.34 per share, and the dividend yield is around 3.4%. They have it listed here as 3.44%. I also like the diversification in the mid-cap range with their 297 holdings and many companies that are not represented in any other ETFs and the other brokerage accounts that I have, and also not represented as individual stocks that I own. On their website, I'm looking at their holdings. You can see the top 10 holdings here: HP, Valero Energy, Phillips 66, Lam Research, Occidental Petroleum, KLA, Western Digital, PACCAR, Applied Materials, and Cummins. And their fund sector allocation is here. You can see that they have a good percentage, 21% in financial services, and then 18% in consumer discretionary. And finally, let's have a quick look at their performance. This fund has a performance return of 11.27% since inception. And then finally, its expense ratio is at 0.20%. Now I'm looking at HDV, the iShares Core High Dividend ETF on the BlackRock website. HDV tracks the Morningstar Dividend Yield Focus Index. I bought these shares in 2 batches. The first 75 shares were bought in May, and then 50 shares were bought to lower my cost basis when the share price dipped lower than my original purchase price on August 15th. I want to highlight that the dividend yield is at 3.27% and that it has a $3.07 annual dividend payout per share.
If you go back to the performance, you can see that the market return since the fund's beginning in 2011 is at 11.62%. The expense ratio for this fund is at 0.08%, which is pretty low. As for their holdings, the ETF is comprised of 79 companies, with the top 10 holdings representing energy, communication, consumer staples, and healthcare sectors. And they are ExxonMobil, Verizon, Johnson & Johnson, Chevron, Procter & Gamble, Philip Morris International, Wells Fargo, Coca-Cola, Pfizer, and Merck. One thing I don't like here is that Philip Morris is in the top 10 holdings at around 5% of the fund. I do not like companies that make profit from tobacco sales, and I especially dislike Philip Morris for their Juul product and its role in teen addiction to nicotine. This personal stance actually keeps me out of some of the other ETFs that are even more heavily invested in such companies. And to make up for having Philip Morris in this ETF, and for any other tobaccos or smoking-focused companies that show up lower down the rankings in any of my ETF holdings, I will be donating 20% of all dividends I earn annually from the HDV ETF and 10% of any realized profits from the sale of HDV shares to the campaign for tobacco-free kids. If you're interested in doing something similar, you can find their website at tobaccofreekids.org. This is just one of the nonprofit organizations that I will be supporting with my earned dividends. Let's move on to SCHD, Schwab US Dividend Equity ETF, here on the Charles Schwab website. This is a large value ETF that I already own shares of in my personal E-Trade Trust portfolio. This ETF tracks the Dow Jones US Dividend 100 Index and has a healthy annual market return of 13.5% since inception. Their dividends currently pay out at $1.55 per year, and I have their yield down as 2.96% right now. They have 2.86%, but that was from the end of July. It took some time for this fund to reach a price in which I wanted to buy into it. I scooped up 100 shares when the price made its first big dip of the summer on August 5th. The expense ratio is the lowest of this set of 5 ETFs at merely 0.06%. SCHD top holdings have some crossover with individual stocks I hold in my E-Trade Trust account, and those are Pfizer, Intel, Procter & Gamble, and Texas Instruments. Their other top 10 holdings are Home Depot, ExxonMobil, Verizon, Coca-Cola, Pepsi, and IBM. There's definitely still enough variety in this ETF as a whole to spark my interest in investing in it. I feel that if the fund is committed to these companies that I'm also invested in, it provides some reassurance to me about my personal investments in those businesses. And back on the State Street Global Advisors website, I'm looking at SPYD, the Spider Portfolio S&P 500 High Dividend ETF. This fund tracks the performance of the S&P 500 High Dividend Index. You may remember me talking about this fund previously, as it is one of the funds I chose for my Grow Your Dough Challenge account at E-Trade. For this TD Ameritrade account, I have purchased 3 lots of 100 each of SPYD. I made my initial purchase of 100 shares of SPYD at the end of May. Then in August, I snapped up another 100 shares when the price dropped 5 cents below the price I had previously bought it at. And then the lowest ask price kept dropping incrementally. So a few days later, I decided to add the third lot of 100. SPYD pays out an annual dividend of $1.70 per share, and the current dividend yield is at 4.67%. When you look at its performance, its return since inception is at 11.29%. One thing I like about this ETF is that 20% of their holdings are in REITs. The other is that though there are only 81 holdings, the risk is spread fairly equally among them, with the weightings ranging from 0.89% to 1.49%. So let's have a look at these top holdings. They have Newell Brands, Crown Castle, Kellogg, HCP, Campbell Soup, Ventus, Welltower, AT&T, Entergy, Realty Income. Another nice thing about this fund is that the expense ratio is at 0.07%. That concludes the 5 dividend ETFs I have invested in for my TD Ameritrade Trust account. Now, there were 2 more investments I was looking at for this account, and I might still invest in them if the price is right. One is FREL. This is the Fidelity MSCI Real Estate Index ETF. It's a REIT. I probably missed a good point to get in it on August 5th when it dipped down a bit. And now I'm left waiting because I don't want to pay the current price, which is close to the 52-week high. Doesn't come back down, I might have to let this go. Their return since inception is not the greatest at 5.9% market return or 6.26% NAV return. It's not as high as any of the other ETFs I selected. The benefit here is the diversification in a number of popular REITs and the $1.24 annual payout with a 4.66% dividend yield. Also, it has a low expense ratio of 0.08%, which helps to make this an attractive investment for me. Finally, honorable mention goes to the iShares Core Dividend ETF DGRO, which did not make the cut on my ETF screener. It failed at the annual payout level as it's 87 cents, which is below the dividend 12-month payout total of $1 or more that I had required in the screener. However, it does have a market return since inception of 11.3%, and it has a low expense ratio of 0.08%. It has 483 holdings, with nearly half comprised of companies in the financial, healthcare, and technology sectors. Holds a mix of value and growth stocks, and it tracks the Morningstar US Dividend Growth Index. There's some crossover with the holdings in other ETFs I own. As you can see here, we got again Johnson & Johnson, Procter & Gamble, Pfizer. So I don't feel too bad about not owning this. But if the price were to drop into the low 30s as it did at the end of 2018, I would consider adding this ETF to my portfolio in order to have more exposure to some growth stocks. Finally, DGRO has a current PE ratio of 18.09%, which is higher than any of the PE ratios in the ETFs I have purchased, so a tiny bit riskier, so I'm not jumping on it just yet. That concludes this video on the 5 dividend ETFs. Please comment below with your favorite dividend ETF. Mine is SPYD, as maybe you could tell by the fact that I bought 300 shares of it for this account. If you enjoyed this video, hit the like button and remember to subscribe for more content on personal finance and personal growth here on Squintillions.